We're going to talk about investing versus trading. What should you choose? Hey everyone, welcome to the channel. If you are new, please do subscribe, hit that bell button, like and comment. There's quite a lot of people not subscribed, so please make sure you do so it does help. Now, on the screen, sorry, but if you want to learn more about cryptocurrency via myself, there's a free course coming on this channel. This is my company channel, Learning Crypto Limited. There's a free course on the website, but this is going to be more tutorial based, and we're going to explain a few little videos what's going to go on there in this video alone. So feel free to jump in. Mondays is a video, and there's going to be a lot more videos to come, which is going to be pretty damn exciting. So we need to talk about a few things. We're going to talk about investing first. This video is going to be all about the whys and the do's and the don'ts and all kinds of stuff like that. So investing, right? Chalk and cheese realistically between investing and ultimately trading, right? You do a lot of work beforehand with investing. You need to do research. You need to obviously scour the internet, find all the information that you need to get, understand the tokenomics, understand the team, understand the roadmap, the white paper, partnerships, validating and verifying all the sources and making sure that that is a really good opportunity based off X, Y, and Z. I know a lot of people just copy me. I know a lot of people just don't give a shit and just go, I'm just gonna buy that, like a little lottery, pick a mix in a sweet shop. I know it happens, right? But in my honest opinion, the money in crypto is in investing, and I'm gonna explain why. So let's talk about the different mentality strategies that is required, and I'll go over a few little tactical things you can do regarding the world of investing. The first thing that you need to do, and I've talked about this loads of times, is research. You need to find a coin and understand it fully in its entirety, right? Know exactly what's coming, understand why it's doing what it's doing. Big things, right? Now, a lot of people I know don't do that, but the fundamentals are key. You need to then discover if it is under or overvalued. You're not going to buy Chainlink at $20, no matter what, you know, person on YouTube or on a tweet going, oh, it's going to go to like $1,000. No one can tell the future. Funny that, but you need to understand a value proposition. If you're investing in a coin at all-time highs or pretty much 80% towards all-time highs, you've probably got yourself onto something that's already run, right? You need to understand that mentality, that thought process. So let's talk about a coin, XLM, great example right now. And you're probably going to be thinking to yourself, well, yeah, you've got a point here, Ash. Even if I just do this on the chart, right? You know, XLM has been around for a while, but now that it's shot up in value by, you know, well, now that it's doubled in price, you now want to buy it. You're now like, I want to buy XLM. That is the wrong mentality to have, and I'm going to explain it in a more detailed manner. You need to invest in coins that are not talked about that much before they go pop, before they go bang. The likes of the people who got very wealthy on Ethereum, XRP, Litecoin invested early, not when Ethereum was like $1,200, not when XRP was like $3. That is how you lose, and you're becoming a gambler, and you don't want to become a gambler. So let's talk about what I do. Personally, I use Binance. A lot of people ask me this question. I use Binance for spot trading only, buying the fundamental asset, and then I use my ledger to store it, essentially, depending on what it is, okay? Most people don't know this. These are just encryptions, that's it. It's not a wallet. Funny that. So essentially all it does is it syncs to a wallet on the blockchain. It's an encrypted private key. It allows you access whether you are staking other coins, whether you are like storing other coins in other blockchains. It's very simple, right? Ultimately though, people get caught up in the motions of accumulation trading, selling everything, risk management, and this is where you need to go and learn more. Okay, learn more. Now, when you talk about investing, you got to look at where things are. My opinion is Bitcoin is not an investable asset at this range. I've been saying that for a few weeks now. If you've been listening, people are buying Bitcoin and they're expecting it to go to bigger heights. As I said, we don't know what the future holds. We really don't. So what's to stop it from going down to 4K again? Well, nothing. You know, realistically, it's happened a few times before. It could happen again. We just don't know. Manipulation, market makers, movers, banks, liquidity providers, everything is all against us. We are the pawns in the game, right? We've got to play the game too. So, dollar cost averaging, very, very simple, very, very basic. Go to the highest possible time frames you can possibly go to. Monthly time frames is usually quite good, right? And you're probably going to think, well, why the monthly time frames? Why the weekly time frames? Because as an investor, you should be more relaxed. The work goes in on the research. It then is all about patience and having the funds available to then pick buy orders. You will deposit on the likes of Binance and you will then go onto it and go onto the coin that you want to buy, and you will set orders as per the chart of pricing. Dollar cost average it and be patient, right? Do not FOMO in, do not be an idiot, and you need to be patient and get a good order in. This is an overvalued chart as at the present moment right now. In the future, it might not be. We might go to 50k, then back down to this level, then it is now undervalued. However, we've not been up to this range properly for a long time, and we've not stood here for a long time, so we need to be careful with what we're doing. If you're looking at, for example, an undervalued asset, maybe, let's look at RSR. Not the most price data-y thing on here, but we've been very, very low, and we pulled back into an undervalued range. Right now, it could be on the topsy-turvy side of it may be going on overvalued again. But you got to look at the facts here. This was shooting up. December, up to that point, went up to 265 million zillion percent, right? It went up loads, right? You can see that. Loads of money, right? But it also retraced a massive amount. It retraced a huge chunk of that gain from the top to bottom down to here, 75%. That is a 75% decrease in price. That is undervalued. You should be looking at that. If you were interested at that at the top, why are you not interested when it dips? Fundamental research, do it. It really does help. So that helps. So when you go into these weekly time frames, you need to look at where things have stopped and turned around in the past. This area here is a key. Why? It stopped, it became a resistance point, it turned back around. Happy days. If you look on the 3-day chart, you can see it more clearly. A very, very obvious level. You've also got this level here where it stopped and turned around here as well. And then ultimately all these levels. These levels become very, very important, and they become important in the future as well. Where things stop and turn around, look for the obvious. Now let's go to a fresh chart. Let's look at Cardano, for example. If you zoom out on Cardano, you know that this has been a lot higher. It's actually been a lot higher than this as well. This is just the Binance chart. It's been like crazy levels, over $1. It's undervalued as it stands, in my opinion, if it retraces that entire move, which is quite possible in the long term. But when you start looking left and you think, well, actually, it has been tanking, and you think to yourself, well, where has it been? Where has it been? Where has it been? You can see all these little levels of where it's been in the past, and you can kind of see where things go. And if you're looking for a retracement, you're going to look at this level here, 10 cents. You're going to maybe look even lower, maybe 7 cents. You're going to look even lower, maybe at 4 cents. You just don't know where it's going to go, and you've got to be there to capitalize on them. But as I say, if you were invested in Cardano at $1, why are you not looking at it 15 cents and dollar cost averaging your position? Do not know. So that is investing, right? Simple. The work goes in and you put the orders in and you are patient. In terms of exit strategies, just be happy with what you get, because there's no real defining moment. If someone said to me, investing in Ethereum at $15 and it would go to $1,400, I'd be saying no chance, but it happened. You just don't know. So let's move on to trading. So trading is totally different ball game. Trading, you need a lot of time. Lifetime. Oh my God. A lot of people, right, come to me, want to make money. It's the first thing that they want to see. They see people on YouTube, they see people on Twitter making money. They see what I do in terms of all the chart analysis, and they want, I want to learn that. The fundamentals are learn how to invest first, understand the chart mechanics, understand the fundamentals of the space, then gradually invest in learning how to trade. Cool. So I'll be honest, I don't trade much. I've mentioned that a few times in videos because I don't need to. I'm in a position where I don't need to. I got good investment bags. I have passive income. I run 2 companies, for God's sake. I have a dog. I have a girlfriend. I have a life, right? The whole idea of freedom is not for me to sit and stare at a chart. I do not want to do it, but some people do. There's a big caveat with trading and lifestyle. The lifestyle is the people that are sharing to you that you can live on a beach, in a resort, or do out, you know, cucumbers on your eyeballs and make loads of money is far-fetched. It is absolute nonsense. And the traders in the game are psychological monsters. They really are, and they understand their brain more than others. Now, in a position where I'm in, I trade in a certain way that is on the daily time frame. These conditions right now for me to trade, very crap, very rubbish. The last week or so, very, very volatile, not suitable for me. However, previous levels and previous ranges have been perfect for me to trade, and I've made a little bit of money. I trade on the daily time frame. Requires a lot less moves, but the bigger return on my risk essentially is much higher. So in terms of learning how to trade and what I trade on, I actually trade on Bybit. Now this is one of my accounts here. It's Bybit. I use this. I don't have much money in here because I've not been trading that much. I've got more BTC in here than USD. But the fundamentals are key. The fundamentals are key. You need a plan, you need a method, and you need a place to go. For me, Bybit is chalk and cheese, the best platform for trading. More pairs are coming. It's a better system. It's a better risk management system. It's got so much information on there for risk management. It just makes it so much better. Binance for futures is shocking, let's be honest. So the way I trade, and I highlight this quite a lot in terms of my mentality, I'm a retest trader. I trade the impulse, I wait for it to turn around and go into a range, and then on the trend direction, I put my bids there. Simple. Dollar cost averaging into trade. So as an example here, this is the most obvious example. You got this big massive boom here, and it pulls back. It pulls back into a range where I'll be looking at this level, and ultimately also potentially this level. But usually I put 3 orders in between this area, in the middle of that, and in the middle of that, and then I usually have a stop loss in and around where this region is. It depends on structure. So when you start to look at things, you look for the most obvious. The most obvious is simple. It works anyway. Start the move, it hits a level, it pulls back up, continuation to the downside. So if you were going short, this is the area you start from. You start from these wicks, you go into that range here, and look at that, the way it turns around just around the 618 with the confluence of these wicks and the structure, and it continues going down to the downside, and it actually goes down and hits TP on the nose. That's an obvious example, but that's the patterns that I look for. These patterns right now, the last few weeks, no, I'm staying away from this market right now. Again, if I'm looking at the likes of, I don't know, Uterus maybe, there might be some, no, bear with me. There we go, VeChain. It's all about trends. Trends are your friends, and you need to go in the certain way. Now again, you're looking at this region here, like it's coming down. Again, same situation here, right? You got a similar sort of situation. You got, essentially, you could probably start from this wick essentially, and you go to this level here, where this part is, and over a period of like a day or two, it like zips back up into a range and it continues going down. These are more harder skill moves. I prefer the more obvious ones where you see in certain things, for example, you see in this rejection here, you think, oh, it's died. Okay, oh, horrible. Now, what have we got here? We've got the pullback. What we got? EMA crossovers to the downside, that's key. The RSI is relatively low, and it's pulling back from a level of previous resistance and support levels from the past, as you can see here. If I just zoom a little bit out, you can kind of see where this level here has been kind of notable, as in this wick here, this region. All these wicks kind of holding it at support, happy days. Zip back into it, continuation downside, back down to this level of, you know, psychological levels. Now that is on a daily time frame. That allows me to do it where I can find the moves, I can chill out. But a lot of people like go, oh, the 30-minute time frame, boys and girls. Oh, trading this, literally staring at this all day, every day, thinking, I want to make money, I want to make money, I want to make money. And what their people are seeing, we're seeing successful people over time. People look at me and go, oh, wow, you're good at this, that, and the other. Yeah, great, but I've got 5 years in the game. Some traders have 10, 15, 20 years in the game, trading with big bags, accumulating compound. Joe Blogs, watching this video right now, wanting to learn how to trade, will not be in that position for a very, very long time. That is a reality. Like literally 97% of traders lose money. I've lost a ton of money trading. Wow, I've lost loads of money trading. But over time, I've refined my tactics, I've refined my risk management, my plan. my strategic planning of psychological levels and what I put on the chart. All the stuff on my chart that you see is psychological. All these ranges, all these bounds of where the wicks stop, where it turns around, it's all psychological based on Fibonacci. I believe in Fibonacci more than anything because a lot of people also believe the same as me. It's like a movement, it's like a cult in a way, where more people will look at these levels as significant. The more people that use them, the stronger they are as holding as resistance or as support. Simple. So there's multiple ways of learning how to trade and understanding trading. Now, I mentioned at the start of this video, free content on that Learning Crypto channel. I'll be going over how to use Binance and how to use Bybit correctly, properly as a tutorial, right? It's very, very key to understand it. Risk management in trading is about 80% of it. It really is. It's not about what the candle's telling you. It is all about keeping in the game and risk management. If you understand the basic strategic strategy of understanding where a coin is going, that's half the battle. Understanding the direction's key. Oh, we're going that way. It's when you get that little mind going in, oh, what if I went a little bit faster on there, a bit harder on there, less stop loss, bigger risk, ooh. That is where you start playing games with your inner chimp, as they call it, and that's where it gets really interesting. So when you're looking at trade certainty, the way I trade is simple. I use a weekly time frame for my levels, right? I use a daily time frame for execution and monitoring. Simple as that. And when you're looking at this trend, now this is one of the trades that I got in recently, was the obvious impulse, pullback, and off it goes. It's a real obvious trend. And as I say, it does the exact same going both ways. And this is an obvious bull trend. I will only look for longs in this situation, but we're looking a bit toppy at the moment. It's a bit risky for me to even contemplate, and it's all about risk. There's no harm in not trading. And as I said, I trade about 2 to 3, maybe 4 times a month, realistically, just to top up what I've got, and then I invest it. Simple as that. It's all fun for me. And for me, the money has and always will be in investing. It always is, because the gains are bigger. You can sit in a coin, you can take the risk off the table, and you can chill in it for as long as you want to and just reap the rewards. Over the period of the last month or two, I've made a lot more money than actually just faffing around, playing around and playing the market. Realistically, you know, anything that is good in trading should be pressure off. It should be enjoyable, relaxing. It should be a game. It should be something you enjoy, looking for patterns, looking for things. So when I look at this Litecoin chart, for example, this is an obvious uptrend. It bottomed out, EMA's crossed over, confirmation number 1. Looking at the RSI, it bottomed out, showed a divergence over this period here, and it started to then show a sign of life, a reversal. EMA's crossed over, it's looking quite good. Confirmation of that is always key. That is like the most, that's key number 1. When you start getting impulses and looking at the chart and you're seeing things looking obviously turning around and starting to turn around a little bit and people panic, well, guess where the buyers are going to be? The demand zones are always going to be there. Again, similar sort of situation. If you're looking at a certain point here, you got this is the start of the move, rejection. You could probably go this wick here. You're looking at this level here, it turns around, it starts to gradually turn around, and then it shoots from this 618 level. This is an obvious demand zone. This is and was a support level. It became resistance for a brief period of time, and then it flipped it, bang, back over into it. So if I draw this out just to make it more obvious, so if you're looking at this range here, if you're looking at that level alone, right, and looking at across, now this is just freehand. It's been resistance before, it's been support before, it's been a key level, right? Break above it, it becomes support, and then it goes, right? Obvious trade. That is what I look for. As I said before, trying to trade these volatility candles, it's impossible. So I wait for a settle period, and then I just trade the trends nice and neatly. And just to repeat the process, just to say, as I said before, I put orders in and around these regions. There's an order there, and order in and around there. Simple, just dollar cost average, some tactical orders, small risk, happy days. Again, similar sort of situation. It impulse, if you miss that one, it does pull back at that resistance, back into that level again, off we go. You know, it's all psychological, all in your head. So, long as the setup's good, long as there's good support and resistance psychological levels to go off as well. There is another level down here, but it's deleted because we're freaking miles away from the time frame, by the way. But I hope this does help, but as I said, there's going to be tons of content going on that other channel, produced by myself. If you want to learn it, it's definitely one thing to do. See you later.